Next guest says what is needed from the markets is hard evidence that the soft patch really is transitory, that the slow global economy will, in fact, recover at some point. Hugh Johnson is chairman and chief investment officer at Hugh Johnson Advisors. He's a Bloomberg best on the economy and also on jobless claims. John Erlichman, Dominic with me as well. And Hugh, so you hear Schmidt talking about, look, maybe not a double dip, but a slow, a slowing of the global economy. That's got to mean what for the markets then?
Well, a slow economy would be just fine. What you hope, and he talked about a double dip, is you hope that this is not a double dip coming. In other words, the financial markets have been performing as though maybe we have a double dip coming and we have to have some evidence or we have to have a higher level of confidence that that's not the case, that this is only transitory, as Chairman Bernanke has suggested. And that simply means we've got to see a series of economic numbers, starting with the June employment numbers, which would be great. And they've got to be positive or better than expectations. We've got to get back on track, in other words, with the economic numbers, which are essentially, those numbers came to a standstill in the month of May.
Hugh, it's John Erlichman. The S&P 500 has come down about 7% since the end of April. Does that mean the market is now in line with those lower expectations for the economy?
I kind of hope so. I kind of hope that this is just a modest correction, or maybe 7, maybe it goes to 10% correction in an ongoing bull market. Hopefully that's the case, and the evidence, or what's going to give investors the confidence to get back in and start to buy stocks again, is going back to the same thing I mentioned before. Economic numbers that give you a level of encouragement or confidence that this is only a soft patch, it's only transitory, and we'll get back on track. I think that's going to be the outcome, but boy, looking at the financial markets now, you can't be convinced.
Well, Hugh, it's Dominic here. One place investors are really voting with their wallets, guys, is in the junk bond market. We're seeing those funds sell off like crazy. EPFR says the third biggest weekly outflow out of junk bonds for, ever on recorded history here. What is that saying about how people feel about the economy? Because people leave that junk bond market when they think that those companies that are speculative grade aren't going to be able to kind of weather the storm, so to speak.
You hit the nail on the head. That's one of the many signs that's coming from the financial markets that tells us that investors are starting to lose confidence in the economy. In other words, they're expecting, well, let's say the economy's slow, but maybe even something more severe or more serious than that. You see that also in performance of sectors in the stock market. All of the defensive sectors, utilities, healthcare, consumer staples, have been the best performers. Large capitalization stocks are performing better than small capitalization stocks. And as you mentioned, junk bonds are performing very, very poorly. Those spreads are opening up. And again, investors are not willing to take as much risk as they were before. And we've got to see them come back into the markets and start to take more risk. They will, but only if you start to see better economic numbers and they're convinced that this is not going to be something more serious than a soft patch.
And yet, Hugh, aren't you pretty fully invested in equities right now?
Yeah, I am, because I think that this is only going to be transitory. It's only going to be a soft patch. But at the same time, if I'm an investor, I can't ignore the fact that the investors, that the markets have shifted towards taking less risk. So at the same time that I'm still maintaining a full allocation to equities, in other words, I'm fully invested in equities and fairly optimistic, at the same time I've shifted within the equity part of a portfolio. So I'm now moving healthcare from an underweight to an overweight, consumer staples from an underweight to an overweight. In other words, I'm starting to build some defense into the portfolio.
Okay, Hugh, thank you so much. Always great to talk with you as well. Hugh Johnson of Hugh Johnson Investment Advisors.